Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com. So one of the big fears that people have, of course, is hiring a financial advisor and then losing a whole bunch of money. Well, apparently, this person decided they were going to try this on their own, and it didn't turn out too well. I don't know how this possibly could happen. Woman writes into Yahoo Finance in the advisor column, and she said, our investments were $450,000. They are now $250,000. How do you lose 50% of your money in this market? I don't get it. But she then says,
"Oh, Bitcoin."
Yeah, maybe she was real risky like that. But when it comes to losses, when is enough enough? When should I go to cash? Interesting. Do you see that? I mean, I imagine you've had people who come to you and they've tried it on their own. They've failed. And then they go, Sharice, this is a mess. I've got to do something. Can you fix this? At what point is it when they come to you like that?
Let me paint the picture.
Okay.
Because we always talk about the roller coaster ride. So I know you baby boomers, you're probably not on roller coasters, but just go back to the days where you can remember being on a roller coaster.
All right.
And boy, do we love roller coasters because we get butterflies, right? And so you're going up and you're in tick, 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 tick. You know something's coming around. We know. And then you get to the top and it comes down and you're like, woo, right?
Yep.
And then you do it over again and you go really fast and sideways. And it's going to happen a couple of times. And then you're going to get to this grand age or grand time. And I would call it, once you've been on that roller coaster 3 times, right? You're going to get sick because eventually that tick, 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 tick.
Don't want
You're going to be at a phase where you're living on your income and that joyful feel coming down the roller coaster.
Not so joyful.
It's not so joyful because your 401k just turned to a 201k. So where do people typically reach out to us? Randy, is your question.
Yeah.
So you get the tick, tick. It's when they've already gone over.
Okay.
And they're halfway down.
They're screaming.
They're screaming. Right. And so we see that a lot. And depending if they have bonds, some people they come to us, they have tons of bonds. Depending if they have the older bonds, the short-term bonds or long-term bonds, they're like, why am I not making any money? Right. They sometimes come to us too late. So kind of pot committed on some of the stuff they're doing. So my recommendation is that you should not, I'm telling you, you should not be paying attention to the stock market in retirement. I know that's easier said than done because we're just so used to it. But if you have a well-built plan, right? A well-built plan, meaning number one, your investment plan is covered, meaning that investment plan isn't just a 60-40 portfolio because you'll be calling me when you come through this roller coaster ride because you're not going to like what you see. That's a 60-40 portfolio. You can go to any bank and brokerage firm on every stoplight you stop at and get that deal for about 1.25% to 2% a year. And that's your investment plan. If that investment plan is diversified, right? And you are putting a bunch of different alternatives in there, not just a 60-40 portfolio. Let's say you have 5 different investment strategies in there. You're probably not going to have as much worry because some stuff is going to grow slower. Some stuff is going to grow medium. Some stuff is going to go really fast. And you're going to watch that balance take place and you're going to be okay with it because you can see not all things go up at one time, not all things go down at one time. And the goal is, number 2, is that income plan. Like the withdrawal strategy. Randy, everybody says, I don't understand this income strategy, this withdrawal strategy. Where do I pull my money from first? If I've got one bucket, especially the 60-40 portfolio, right? And if it's all IRA, we do not want to be pulling all of our money from one bucket. That is a no-no in retirement. That is not a plan. That is just an investment. So we want to create an income strategy so that when markets do this tipsy-turvy thing, your checks are still coming to you, right? And if you don't know if you have that, then you don't have that.
Yeah.
You're working with the stock jock, right?
Yep.
And that's okay. But now you know, because we want to help you build that plan. It's uber important more now than ever because markets are taking off. Hey, there's a lot of noise out there today. And, if you're having some worry, hey, we're building more missiles at Lockheed. Hey, what does that mean, right? Or, potential war, tariffs changing. If those things are worrying you, which means now you're worried about your investments, then you have to come in and get a plan. It's really that simple. 1 out of 5 people have a plan, Randy. And this is why they spend less. We're seeing people spend a little bit less right now in our world when you look at the data, and because of all the noise out there. And if there's a lot of noise, you're not spending money, what kind of retirement is that? You should be sailing into the wind in retirement and knowing some of that stuff's going to be tipsy-turvy, but you don't care because you don't need that money for 10 years. You've got an early 10-year time horizon, your go-go year plan. And if you don't have that, then I can see why you're worried and why you're not spending more money. So we want to create that investment plan that's strategic, and the income plan that helps cover inflation, that builds in your Social Security, that is your withdrawal strategy. Because do we pull it out of the brokerage account, the Roth IRA, or the IRA? So which buckets do we pull it out? I get why it's important to understand that, because you also want to save on taxes. Because if you pull out the wrong bucket too soon or too late, you paid more to Uncle Sam than you really need to. So that leads to my third strategy, the tax plan. But we won't go into all that today. But these things matter in retirement. And most people are just specializing in one thing, the investment plan. Mm-hmm. That's not good enough. Sorry.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.